Good morning, welcome. I am Pam Holt, and this morning I have the pleasure of speaking with Nick Massey. Nick is with Proper Insurance. They are the premier insurance provider for the hospitality industry, short-term rental hosts like us. I'm so excited to talk to him because insurance is a topic that nobody wants to talk about. Maybe it's not as sexy as some of our the other areas of interest, but it's so crucial and it's so important. And it's so important that you understand it and that you not sort of shy away from, the scary parts of it or the perceived scary parts. So welcome, Nick. Thanks for joining today.
Thanks for having me. Pleasure to be here.
Why don't you tell us about Proper Insurance?
Yeah, so Proper Insurance started in 2014 and is kind of the evolution from our ownership group with their background in the hospitality industry, ranging from the corporate tax side, the president of our company. He handles all the financials. The CEO and the CSO of our company, the other two partners, have been in this space, hospitality space of insurance for a long time. Our CEO, his background was in bed and breakfasts, lodges, wedding venues, event venues, things like that. Okay. He had sold that business, moved out to Montana, got roped back into the business in the early 2000s, and then that kind of led a track to Proper. And what Proper's real mission is there's a problem in the insurance world where everything is so highly standardized, yet vacation rentals are so unique. They don't fit in one bucket. And just the understanding and knowledge and experience from our ownership team, being able to build and develop a product, basically stripping down the basic utility coverages that you get from any retail insurance agent on Main Street, basically, and redesigning a product from the ground up to specifically address the niche issues around vacation rentals. And then being able to take that product and that paper and framework, if you will, to Lloyd's of London, the largest insurance market and the oldest insurance market in the world, and say, look, here's our product, you guys financially back it. So in 2014, that's how Proper Insurance came to be. And since then, we have expanded on and developed the product even further to provide more comprehensive coverages. Recently, because just like we went and redesigned the insurance policy to better fit vacation rentals, we recently invested a bunch of money into our own internal claims team. And the trust we have from the carrier gives us claims authority to handle claims internally here in our office. And that's really, really important for us to be able to invest in that part of the business so that we are not pawning our clients off to a third-party claims administrator that doesn't understand the unique capacity of our policy. The fact that we made it until 2022 without our own claims authority, with as few negative claim interactions as we had is surprising, and I'm happy we made it that far. But having our own internal claims allows us to fully control everything from start to finish with the client. So you buy the insurance, you get educated from our staff, you have a better understanding of the insurance that you have and the coverage that you have. And then when something actually goes wrong, you're still with us. You're still getting that white glove service through and through our claims team, who are very, very highly experienced individuals that we've spent a long time searching for to hire into our organization, to take care of you through the claims process and not, again, get farmed out to a third party that gets paid whether the claim's denied or not. They really don't care about the client. So in full Proper Insurance, we've really built and developed the company around a forefront of education around what's going on in insurance and providing a deeper understanding of insurance when you call in for a consultation and get a quote, all the way through the claims handling process if you actually need to use the product at the end of the day.
Okay, let's start at the beginning.
Yeah.
If someone is a host, they host guests in their home, be it a private room or entire space, why do we need special insurance if we already have, a typical homeowner's policy?
Yeah, that's the $1 million question, right? So why can't I just call my regular agent
Right.
and just get a policy for short-term rentals? So
Why can't I just use my regular policy and not even
yeah,
do that?
yeah. So the standardized forms in insurance, there's three types of coverages. There's a homeowner's policy that's meant for your primary residence where you live. There's a landlord policy that's meant for long-term rentals, basically, and then a commercial business policy, which has an extremely broad scope of protections and are custom built for what you're doing in a business sense. When we look at vacation rentals, at the end of the day, they're residentially deeded properties, so everyone turns to a regular homeowner's product. The problem is that in the standardized language, because insurance language is highly standardized across all 50 states, all fairly generic, your regular homeowner's policy has a business activity exclusion tied into it. And what that exclusion basically states is if you're making more than $2,500 in revenue at the property, you're a business. And so they could virtually deny any claim that happens to your home when it's found that you have an active listing in any capacity at the property for short-term stays.
There you go. That's why. That's important to hear, and it's important to understand, because of course that's going to apply to all of us. What about the coverage we have with the OTA if we happen to be using them?
So the OTA coverage is there. Yeah, there's thousands of OTAs that you could use, and a number of them have either built-in free insurance, air cover being the most marketed and most known out there, or they may have options for your guests to pay for additional insurance during their stays that are supplemental. Focusing primarily on air cover, since that's the biggest one and most everyone's going to be hosting via Airbnb for the most part, it is not insurance. It states, they hide the fine print well, but when you really dive into it, it states right there, like, this is not here to take over your regular insurance. You need to still have your own insurance. Unfortunately, if you do a little research on it, via your own resources, Facebook groups, and other blog areas, you're going to find that a lot of people have negative interaction. At the end of the day, Airbnb is not an insurance company, right? So we've had really good, I've had good feedback from clients on smaller claims, which is great. When it comes
to them, they don't, there's, in my experience, there's a very sort of narrow kind of lane that they're prepared to deal with. And that is.
Yeah. And like back in the day, it was like you had to file the claim while the guests were still there. And then now they've adjusted it to, I think it's 72 hours after the stay to file a claim. Unfortunately, what we've ran into from a property damage standpoint, that factor of air cover, is when they're fairly large losses, the response is rather negative, right? From the liability standpoint, the only times I've really seen them jump in on a claim with us where they need to pay a share is if media gets involved. They've shared in some losses with us that were unfortunately limit loss claims. And what that means is we paid $1 million because we cover $1 million on liability. And then Airbnb paid $1 million as well. One of those was a carbon monoxide poisoning claim. Another one was a pool drowning. That happened, and those hit media.
Those hit the news,
news outlets. Yeah. So then they chip in, but I've unfortunately had clients with large property damage claims from house parties and things like that, where they get very little, if no response from the hosting platform. So it's very important that you verify what coverage you have in the base end on your insurance that you go buy that has your name on it, that you have policy rights to. Yes. And then the hosting platform insurance is a backup or additional, extra. If they do pay out, great. If they don't pay out, you've still verified that you have the right coverage yourself.
So if you have a claim, then do you have to go through them first before we come to you, or is it vice versa? Come through you?
No. If you're a client of Proper and you have a claim, come to us first.
Okay.
Our claims team will navigate with you if you need to file with the hosting platform or not, to see if they'll chip anything in. Mostly that's going to be around liability claims. Somebody suing you because they got injured at your property.
Right.
We want it to go to them and us. So, always claim first on your regular home policy, and then hosting platform is second. But still file a claim with everybody who you have, because if everybody ends up paying, then it's just better for you, the consumer, at the end of the day.
Okay. Okay. Good to know. Okay. So you guys provide 4 different, and this is important to hear because this is why this makes so much sense. 4 different types of occupancy coverages. So it's the commercial, the personal, the tenant, and the unoccupied. Can you talk about what those are and how they're different?
Yeah, so kind of back to the beginning where we stripped everything down and built it back up. Those 3 insurance policies, well, there's 4 insurance policies. I already named 3 of them. So you have a homeowner's policy, a landlord policy, a commercial policy, and you have vacant property policies, right?
Good.
And they all define different types of occupancies on what they cover. And if it's not that type of occupancy, then they won't cover it, right? So when we stripped everything down and built it back up, vacation rentals can have all 4 of these, right? So if we look at the aspect of purely a second home, entire home rental, right? You're doing short-term rentals, so that's a business. You may take in longer-term stays greater than 30 days from time to time. Could be a neighbor displaced by insurance. It could be a traveling professional, a family moving to the area that stays there for 3 months while they're trying to buy a house.
Right.
You might have personal occupation. If you bought a property, in Galveston, Texas, and you visit there a few times a year, you have personal occupancy. And then we're never booked 100% of the time. So we have periods of vacancy. Right. We have areas that are completely seasonal, right? Maybe you have a property around Mount Baker, Washington, and you only rent out your peak season's winter. And you don't really rent out in the summer, or vice versa. You shut it down in the winter and only rent out in the summer. So we removed occupancy definitions from the coverage. So you have 100% policy limits 365 days a year. On the flip side, right, there's policies that are modified to cover short-term rentals in limited capacity, but they don't remove the vacancy provision. So the vacancy language in standardized insurance is going to state, it could state 30 days, 60 days, or 90 days of vacancy. You have reduced coverage or no coverage, right? So if you have one of those seasonal properties that shuts down for 3 months in the winter and a tree falls on your house, or there's such a heavy snow load the roof collapses, you may not have any coverage.
So situation is even worse because everything floods and.
Oh yeah. So you could have heavy out-of-pocket expenses with something like that. And so it's just one of those items that we really took the care to assess when developing the product to make sure you as a property owner have your free will to occupy the property however you see fit. And still remain covered on the product.
Nice. I think it's really important because, in the lifespan of a property, even within a year, I think of property that I have. Sometimes I'm there, sometimes I'm not. Sometimes it's rented. Sometimes it's family that's staying for extended amount of time. Sometimes it's us staying for extended amount of times. And so we would need, all of that within one policy. And so it's nice to know that we would have that coverage. So the other part that's interesting is what exactly it is that you're covering. So can you go into the detail about that?
Yeah, so the best way to think about our policy, it's a term we coined and just kind of made up. It's the easiest way to describe it is commercial homeowners insurance. So you're essentially getting all 4 of those coverages, those policies in one package versus having to go out and buy a policy and then add on to it, patching a leaky raft, if you will, to try and fill in the gaps. So at the end of the day, you're not sacrificing or losing any coverages from what you currently have on your residential policy that you currently carry. Mm-hmm. We insure to a term that's called special form all risk. That's the highest level of coverage you can buy in the United States, meaning the fewest amount of exclusions. There's still things that aren't excluded, but standardized nomenclature in insurance. So we're going to cover the most amount of things there. We do everything on a replacement cost basis. So you can either buy insurance that's actual cash value, which would depreciate the value of the item based on its age. We don't do that. We pay replacement cost. So a 15-year-old refrigerator, if you got one that lasted that long, congrats. But we'll buy you a brand new fridge if somebody damages it, it's lost in a fire. If it's a covered cause of loss, we'll buy you brand new, subject to your limits of insurance. Nice. We also cover your loss of income during a claim situation that requires you to cancel reservations or not accept future bookings. So
that's really important. That one's important, and I don't know if hosts typically think about that when they think about insurance and they think about losses. But if you're down, for a lot of us, that's it. That was our source of income. And so that's really critical. So I'm sorry to interrupt, but I just had to point out, pay attention to this part. Yeah.
So there's insurance runs in rules of 3, which is actually kind of nice, and break it down. So I had mentioned special form all risks. Well, there's basic form coverage, which is not good, but it's very cheap. There's broad form coverage, which is better, but not best. And then special form all risk. And then you have on the income side, you have what's called loss of use, which is there to pay to reaccommodate you, the homeowner. If it's your primary residence, you need to go live somewhere else for a period of time. That's loss of use. It doesn't pay loss of income. Then you have what's called loss of rents, which is a better option for a rental or a property that has rental, because it pays your loss of rent. Unfortunately, it pays fair market value. So you may get a reduced payout based on the fair market for your zip code. And then you have what's called actual sustained loss business income. And it's a mouthful, but it's the best. And basically what that means is during a claim situation, we are looking at your book of business, your occupancy, your ADR, to pay your lost revenue based on what you do, not the combination and average of you and your neighbors in the community.
That's important because in my neighborhood, I have a fairly distinct dwelling. And so if you were to compare it to my neighbors, you'd just be giving me a fraction of what I actually am able to command. So that's good.
True.
Do you base that on tax returns, or do you look at,
We look at your calendar. We would look at your calendar first and foremost for past, present, and future reservations. We understand that, like right now, there was a huge surge of supply into the market, and so maybe you're getting fewer rentals than what you usually do. But if you were to show us last year that you were running, say, 80% occupancy in January, and right now you only have 30% on the books, well, you usually do 80%. So if you have a history, we're going to take that into consideration on the payout. Okay. Our only limitation on the dollar amount is the limit that you choose to insure. Mm-hmm. So you, Pam, you may decide to insure your income for $100,000 because you want to be that much protected on your loss of revenue. Your neighbor, let's say they have identical house and run identical everything, same, they only want $30,000 in income protection because they don't want to pay additional premium. Our only cap or only limit is the limit of insurance, right? So if both those houses burn down in a similar event, your neighbor is getting $30,000 regardless of how long it takes to rebuild. You're getting up to $100,000 regardless of how long it takes to rebuild the house, right? So if it ended up taking 2 years, which in this market that we're currently in could take that long to rebuild your home, if you're willing to pay the additional premium, you can insure for as much income as you want, right? So we do say for single family homes to estimate 18 to 24 months in lost revenue if you want to be more or less fully covered, right? Yeah. But it costs money. So it's an area that you can make some changes. I like to say we have two types of clients here. We have the client who they use this money to not only pay all their expenses, but it pays for kids' college tuition. It funds the retirement account. It helps invest in future properties, right? So you want to be well protected on your income, and that's important to you, so you're willing to pay the extra premium. And then we have the clients who are like, if this house shut down for 4 months, I can cover all the expenses just fine. So I'm not that concerned about it. And they insure at a much lower amount, save a couple dollars on the premium.
Okay. I guess that's fair.
Yeah. Yeah. I mean, it's not the way I would do it, but
yeah, it's a lot about risk tolerance, I suppose. I don't know. That scares me just even thinking about it, but okay.
Just kind of depends on how deep your pockets are, I suppose. But
yeah.
You as the consumer are fully in control of that coverage item. So totally up to you. And it's really great coverage to have. We've, Hurricane Ian, just got done with that.
Yeah.
A lot of folks are going to be shut down for a long time, and they have that income protection, as long as they included that on their policy and have all the right coverages in place for hurricane damage with us, they're getting paid that lost revenue while their home is getting rebuilt.
Yeah. I mean, when you're in trouble and you're looking at it, you're like, wow, I should have been just fine with writing that check every month.
Yeah. When you look at it after the fact, it's kind of like, I wish I would have insured for more, but having something there is better than nothing. And most of the claims that we're going to deal with in this space are, they're not going to shut you down for more than, say, 6 months unless it's a total loss fire. Yeah. So the vandalism or the roof damage or frozen water pipes like what we saw in Texas last year, you're going to have a sizable claim, but you're not going to be shut down forever. And having that income protection in place to, supplement that lost revenue dollar for dollar is a nice perk.
So if we were interested in obtaining the insurance, what's the initial conversation like? What do we need to have with us, or what do we need to know before we meet?
Yes, very basic information is needed up front. Basically, what we end up doing is if you just go to our website, www.proper.insure, there's a button on there that says 5-minute online quote, and it's fairly basic information. Go through, we need the property, we need your name, your contact info, obviously, so we can reach out, a property address, and basic info. And if you don't know all of the details of the home, don't worry, because we will source as much of that from public record as we possibly can.
Okay. Like the home and the construction and those types of things?
Yeah. Like we don't ask like the roof type, because we'll look at photos and figure out what type of roof is on your house. We don't need to know how many stories it is. We don't need to know what type of appliances or HVAC system or what you have in the home. Like, we don't need that to do a quote. We'll ask you to put in what your requested limits of insurance are for the structure. When that comes into our system, my team of licensed agents here in Montana will reach out to you, whoever is the agent for that area in the U.S., and they will go through a consultation. Our average consultation is about 15 to 20 minutes. If you want to spend longer on the phone and ask more questions, we're happy to. But in that 15 to 20 minutes, we're going to verify some of the information of the home. We'll ask you some additional questions that maybe we need to verify. We'll walk through the limits of insurance and go through, what's covered on the liability, what's covered on the property, our additional coverages like our bed bug protections and things like that. And then deliver you a quote, a very detailed quote. It's 9 pages. Most companies send a 2-page quote with basically no information. We're going to break everything down for you in a very simple to read, understandable document. And you review that and you say, let's do this. I want to upgrade my coverage to the proper policy. You click the link to purchase, and then we're going to go into the second phase of securing coverage. And this is a request to bind insurance. It shouldn't take you longer than 5 or 10 minutes to fill this out, series of yes or no questions. The one thing you need to have with you when you fill that out is any lender information if you have a mortgage on your property. That's really the one thing you're going to have to go look for and have in front of you when you're filling it out, so you can give us the loan number, the name of the institution, and they'll have their mailing address on your monthly statement for the insurance, and that's the only thing you'll need to have extra.
Do you have, do lenders push back ever?
Only if you send them a quote.
Okay.
If you send a lender a quote, there's so much information on there that they will start picking through it and be like, what's all these additional coverages? Really, at the end of the day, your lending institution has a financial interest simply on the loan amount to cover the physical structure.
Right.
So we send what needs to be sent to the lender, which is a one-page document called evidence of insurance. And if you're doing escrow billing, if they pay your insurance and property taxes, we will also give them an invoice on what is due to proper insurance for the premiums. But it just says Lloyd's of London, house, dwelling, whatever it is, this limit of insurance at this deductible, and here's our contact info. We don't send anything to your lender that specifically outlines in big flashing lights, this is a vacation rental.
Warning.
Yeah, no. The only time we run into issues is usually during the acquisition phase.
Mm-hmm.
You're buying a new property and your loan officer goes, send me the quote. They don't need the quote. It's not a proof or indication of any coverage. They just want to know what the premium is. So if they ask for that, just say the premium I'm looking at is X dollars, so that they can include that in your debt to income ratio calculation. Right. So if they do want a formal document before they give you the green light on buying the insurance, then I have a simpler page. Just request it and I'll send it to you. It's specifically designed for lenders. There's a lot of lenders out there now who are specifically engaging in underwriting financially short-term rentals. Companies like Temple View and Vizio, they are specifically doing investment loans for short-term rentals. And they're actually going to require a commercial type policy like ours in order to close on the home. So with those types of lenders, you can send them whatever you want. They're fine. What they're looking for. Yeah. But yeah, basically, we'll handle the majority, if not all, of the communication with the lender when it comes to setting up the insurance. Okay. The only steps you have to take after the fact is canceling your current insurance policy if you already have one in place, if it's not a new acquisition. Cancel that insurance policy, receive a refund check, and then contact your lender on where to send that refund check to replenish your escrow. Yeah. So you're not double paying for insurance for the rest of the year on your monthly mortgage payment. Got
it. And what types of properties do you cover? It's not just a single family home.
Yeah, we will underwrite basically any type of structure. Common ones are going to be your single family house, your duplexes, townhouses, condos, right?
That's okay.
We have a lot of property owners who have their primary house on the property with a converted detached garage that's built into a studio. I don't have to insure your entire property. If there's no rental in the main house, I don't have to insure that structure. I just have to insure the detached structure. And back to our business activity exclusion, there's another one in homeowners insurance that says business activities in detached structures. So you can keep your homeowners policy. You got no business activity going on in your primary house, and I'll cover the detached structure on our policy. We do the tiny homes as long as they've been rendered relatively immobile. There's a definition in insurance that says we don't cover mobile equipment, but as long as I can present to the underwriter that it is no longer mobile, then we can look the underwriter. So we're not going to do the RV that's just parked in the side yard and still got the wheels on it and the motor and whatever in your regular RV. I do insure some pretty unique Airstream trailers.
I was going to ask about the Airstream. Okay.
Yeah, but they're either set up in a backyard and the wheels have been removed and they have a wraparound deck built in, and like you're not moving it without a lot of deconstruction. We have some pretty cool tree houses around the U.S. that we insure. We're not gonna insure like a teepee in the backyard or any type of like camping situation.
Okay.
I do have a couple larger glamping type facilities, as long as each glamping setup has their own facility. We're not going to insure like shared baths and showers and things like that. We're also not going to insure facilities that have like a shared sauna between units, if you have multiple units on the property, or a shared hot tub. The problem here is we cover claims for invasion of privacy. We don't have exclusions for things like sexual molestation and assault. So we're going to underwrite against this family over here and this family here potentially, having a problem. So we look at that. And we have some pretty cool properties that are these, small studio units they have their own bathroom and shower and kitchen, and there's 7, 8, 9, 10 of them across one property. Mm-hmm. And then I've had recently one homeowner was like, well, I want to put a Swedish style barrel sauna at the property that the guests can check in to use. Mm-hmm. And it's like, you got to put it with one unit, and that unit has access, and you charge a little bit more for it. And then as time goes on, hopefully, you're able to include, build those saunas in on all the other units if you want. We just can't have, those shared facilities like that where there could potentially a situation. Yeah.
Yeah. No, I get that.
Yeah.
And so just ballpark how does your policy compare to a traditional kind of homeowner's policy? Are you 4 times as high because you got the 4 different kinds of occupancy types, or how's the pricing?
Yeah, it depends on where you're at geographically in the U.S. Coastal properties, if you're including wind and hurricane, are going to be substantially more expensive than what you have now, because we do the income protection primarily. If we look here where I'm at in Montana, right? That's where my vacation rental will be once they decide to start building. I'm just like waiting patiently for a couple of years already. So in comparison, for my townhouse, 3-bedroom townhouse on a golf course out here, is a regular second home policy is going to be around $1,500, quoted by my Allstate agent. My policy, the proper insurance policy, with pretty much the same limits of insurance, but obviously a much more broader scope of overall protection with the few limitations that we have, we're about $2,700.
Okay.
So just short of double on average. It really depends on what you have for options on your current policy. If you're paying top tier, then we're not going to really be that much more expensive. If you're like most consumers, and this is just kind of the way insurance markets, cheap, quit spending so much money on insurance, you probably have a very limited coverage, because the less you pay, the less coverage you ultimately have on the policy. We could be 4 times more expensive, right? We do run into a lot of situations where a property owner is going to send us their current insurance policy, and we find that they're drastically underinsured. That contract hasn't been reviewed in a number of years, and your building's only insured for $300,000, but with the market spike after COVID, that's $600,000 now to rebuild that house. So, we end up seeing stuff like that, and that obviously adds a lot more premium in comparison, if that's to be found. But I would say expect double. If it's a property that's going to be insured over $1 million, it could be more than that, depending again on what coverages you have. If you went all in, then we're probably not much more. And again, I'll use my primary house as an example because I like to see our rates in comparison to what I'm paying. So my primary house here in Bozeman, Montana, I insure with Allstate. I went, give me every option. I'm an insurance guy. I understand how insurance works. And so I'm like, I want the everything you can give me. I want every single option. I'm happy to pay for it. How much is it? It's $3,400 a year is what I paid for my 3-bedroom, single family house, $500,000 rebuild, about $100,000 in personal property, your regular liabilities from my primary house. I run that quote in my system for my exact house. It's $3,800. So when you have the top tier, it's a $400 difference to get rid of that business activity exclusion, right? So it's not that bad.
Apples to apples then. Yeah.
Yeah. And it's a different animal. I mean, it's a commercial style product. So again, you're just getting so much more coverage and you truly get what you pay for. When we are the Cadillac coverage. We are the premier policy out there. There's no policy out there that covers more than we would cover within the actual contract. And that translates into a premium that has to be collected by the underwriter to take on that risk.
Yeah. Well, I'm a Cadillac kind of girl, so I love it. I think that's great. I appreciate your time today. I encourage everybody to take the time, go on their website and ask for a quote, fill out the information, get a quote, see where it is. Keep in mind though, insurance is a business expense. We are a business. Even if it's your home, if you are in the hospitality industry, you are a business. So you have a business expense. I'm not going to tell you what to do with it at the end of the year with your accountant, but take that information with you when you go and visit and see what they do with it. So
and I do want to add one thing, if I could, Pam, just for the audience. So when it comes to second homes that are entire home rentals, non-issue. That's a lot of what we do. Homes that double as a primary residence, we will insure, especially if the rental is contained inside that primary residence. However, it needs to be a separate suite, like an in-law style apartment with their own entrance and exit and their own amenities. We don't do shared bathrooms and stuff like that. So if you are a primary house and you are just renting out a spare bedroom and there's shared bath or shared kitchen and shared common areas inside the home, our product is not necessarily a fit. It's something that we're just not going to take onto the book of business because my carrier, again, doesn't like that shared exposure, invasion of privacy, potential assault, because we cover it. However, there are products out there that are specifically designed for that type of exposure. So if that is you're just renting out the private room with shared spaces, you do need to talk to your insurance agent about what's called the home sharing host activities endorsement. Another mouthful. Home sharing host activities endorsement. And that is an endorsement that gets added onto your policy. It removes the business activity exclusion, which is nice. It has to be your primary residence though. But it doesn't really add a whole lot of coverages. And I think that's okay because you're living in the house while that guest is there. And so if something's happening, you can call 911 and prevent stuff from getting crazy. They're not going to cover things like vandalism caused by the guest. So in the situation where you have the main house and then walkout basement's its own apartment, right? Mm-hmm. Completely separate and private, you can still buy that endorsement. It's a couple $100s a year. It's inexpensive. It helps make sure your home is covered for the normal stuff if it happens with no limitations or exclusions for business activities. But they're not going to cover malicious damage caused by a guest via property entrustment. And that's an important concept. You're at the office and your guest is at your house and they decide to steal all of your stuff. Those endorsements are not going to cover that. Proper Insurance is the only company that removes that property entrustment limitation from our product, that gives you coverage for handing the keys over to a stranger and then they take all your things. We will pay to replace all of that. So just something to keep in mind. Yeah. If you're investigating proper, if you do have that shared facility situation, that'll come up in the consultation, and we'll just let you know at this time you can't write the business. It is what it is. But for everybody else, yeah, just get a quote. It's free. It's 15, 20 minutes of your time. At the very least, you walk away with a much more fundamental understanding of what's going on in insurance and what you may or may not be protected for on your current policy. And then we want you to make the decision as a consumer from there. If you want to upgrade, we're here to do the paperwork with you. If you go a different route, you go a different route, and we're here if you want to circle back.
Great. Well, thank you, Nick. Thanks for clarifying that that one aspect of what you don't cover. So thanks for your time today. That's been really good information. I hope everybody was able to stick through the whole thing to hear all of what Nick had to say. If you missed any of it, I'm going to be recording this. I'll have it available for anybody. And Nick, is there a way that we can reach you? Do you want to hear from us?
Yeah.
Back to someone else? How can we get in touch with Proper?
So website, again, is www.proper.insure, or just Google Proper Insurance Short-Term Rental. Will pop right up for you. You can also call us on our 800 number, which is 888-631-6680, and we'll get you connected directly with, we just need to know where your property's at, get you connected with the agent in my office who'll help you. And so if you prefer to do everything over the phone, we can do it that way. If you just want to plug in the info to get the process started, we typically reach out to you within the same day and go through the consultation and verify the info to send you a quote.
Great. And that's for properties within the U.S. only?
U.S.-based properties. We insure in all 50 states based on underwriting. There's obviously areas in the Sierras of California that my carrier is just not going to take on for forest fire risk. But yeah, every area in the United States we will look at and do our best to try and get you coverage.
Fantastic. Okay, Nick, thanks so much for your time today. We appreciate it.
Thanks for having me, Pam.
Okay, take care.